Hello and welcome to Explain the Charts. Today is May 29th, 2025, and we're analyzing the USDJPY pair, looking at both news events and chart data. Recent Google searches and news articles point to some interesting developments. We see that the Japanese yen has been losing ground with super long JHB yields falling sharply. There's also talk of Japan potentially trimming issuance of super long bonds, which could impact yields. Geopolitical tensions and uncertainty around trade policies, particularly concerning U.S. tariffs, are also significant factors. Let's switch to the daily chart and see if we can spot any of these macro effects in the candles. We can see a recent period of consolidation after a large rise, followed by a period of decline. In January and February of 2024, we saw mostly upward movement. Then March, April, and May were pretty range-bound. Then we see a sharp drop in July followed by choppiness. The pair spent much of the past year trading with a fairly wide band, in which it could swing up and down with no clear trend, but recently the volatility has increased. If we narrow into the last several months on the daily chart, we can see that the pair has bounced between 140 and 148 a few times, forming what appears to be a short-term channel. There has been some recovery in May, but it has flattened again in the past week. Recent news mentions that key levels around 146 are in focus. This is lining up with the candle data because we see that the most recent candles on May 27th to 29th are indeed hovering around that level. But we also see that, as the news says, it is struggling to break that handle. Now, let's zoom into the 1-hour chart for a more granular view of the recent price action. Looking at the candles from May 9th to 14th, we see there's been a pretty choppy ride with no clear trend. We see a lot of indecision in these hour candles, a lot of dojis and wicks, which indicates that there may be some volatility, and it's not clear where the price may be going in the short term. On the intraday level, there appears to be some resistance around 148. The market may be waiting for some more economic news or events before making a decisive move. Now let's look at the 15-minute chart from just the past few days. The 15-minute chart paints a picture of short-term consolidation and some minor fluctuations. We can see from May 25th to 28th that the pair has been oscillating within a tight range, generally between 142 and 146. There doesn't appear to be any strong momentum in either direction in the very short term. The market seems to be in a holding pattern awaiting fresh catalysts. This could be an indication to stay on the sidelines and wait for more confirmation of the broader trend. So, what are the key takeaways? Firstly, the USDJPY pair is currently range-bound, as recent news and our chart data both suggest. The support and resistance levels between 142 and 148 seem to be in play. The pair's short-term direction is unclear, and it may be best to wait for more clarity before entering any new positions. It's important to keep an eye on factors like Trump's trade tariffs, the Fed's interest rate decisions, and the Bank of Japan's monetary policy. If the pair breaks above 146, we could see a bullish move towards 148. However, if it falls below 142, a bearish move to 140 is possible. Thanks for tuning in to Explain the Charts. Be sure to subscribe for more in-depth analyses. Remember to always do your own research before making any investment decisions.